Hello and thank you for joining us for this week's MacDesk Floor Report. I'm Rebecca Darst from the NYSE Market Access Center, speaking to you straight from the trading floor. We hope you had a wonderful Thanksgiving, and as for the market action, we've dodged a few turkeys today. We are up 46 points in the Dow. That's about 6.5 S&P points, which is well off the highs, but a very nice recovery from the lows in yet another choppy, volatile session with lots of headline risk today. So let's recap what's brought us to this point. We came to the floor this morning with futures pointing to a solid 60-plus point gain at the open. Asia Pacific stocks were higher across the board, with the notable exception of the Shanghai Composite, which logged a fourth straight day of losses. European stocks were generally higher, pulling off their highest levels in nearly a year and a half, possibly helped along by slightly better than expected German unemployment data and a better than expected read on a monthly survey of Eurozone economic sentiment. The index reading for October showed the first increase since February, pointing perhaps to gathering confidence on the part of Eurozone businesses, although consumer sentiment was still soft. Here in the U.S., weekly jobless claims came in at 393,000 new claims, which was a little lower than expected, with continuing claims also ticking sequentially lower. We also had our second read on third quarter U.S. growth, which showed GDP increasing by 2.7%. That was a little lower than street consensus was looking for. Incidentally, Goldman Sachs responded to the Q3 revision by cutting its estimate for Q4 GDP from 1.7% to 1.5%. Pointing to the higher than expected rate of inventory build in the Q3 revision and citing weaker underlying momentum going into Q4 than they had anticipated. November comp store sales from several leading retailers showed the very bleak impact of Hurricane Sandy at the beginning of the month. Wall Street analysts were looking for an increase of 3.5%. The net gain, excluding drugstores, was up just 1.6%, with virtually all retail subsectors coming up short. Again, market participants were willing to give this a pass due to this month's weather being an extenuating circumstance of the worst sort. October pending home sales data came in better than expected at 5.2%. Market was looking for a gain of 1%. But Raymond James put out a note this morning, analysts there pointing out that the gain was due to a lopsided increase in the Midwest and that September sales and new home sales data point to no real great improvement since last May. So there's been a lot of second guessing even the rosier data points today. But the real kicker in terms of this choppy intraday volatility that we've been seeing continues to be the headline risk emanating out of Washington as the deadline for the fiscal cliff looms. Just before noon, we had a press conference from House Speaker John Boehner, in which the Speaker said he was disappointed in the pace and tenor of budget talks after a meeting with cabinet officials, including Treasury Secretary Tim Geithner. He also opined that President Obama's actions in the fiscal showdown have, quote, not matched his public comments. There was a rebuttal from Senate Majority Leader Harry Reid. Remember, he also used the term disappointment to describe progress on the talks the other day, and it tanked the market. This time around, he did say that Senate Democrats are not willing to kick the can down the road. If you're fatigued by the choppiness of this market, it's because the market itself has grown weary of this kind of entrenched political partisanship. In any case, it's Washington calling the tune today. And looking toward the end of the week, we've been seeing buyer-driven interest in SPY weeklies at strikes 141 and 142 on the put side as the S&P index ETF trades around $142. Activity in the at-the-money call has been mostly seller-driven. This suggests some traders looking to end the week on a relatively weaker note. But as always, we'll be on the floor to see how the action shakes out tomorrow. For the very latest market action, be sure to check your inbox for the midday. Until next week, I'm Rebecca Darst for the NYSE MacDesk Floor Report.